Is the key metric still subscriber numbers for the streaming platform, or are things slightly changing in the media world at the moment?
Well, they are slightly changing for the media moment. You know, about a year ago, I would definitely say that that stock traded mostly on subscriber growth. But now, as Wall Street is expecting big entertainment companies to post profits over the promise of potential gains in streaming, I think more of Disney's stock is going to rely on what it reports today, and especially in terms of its parks and also its media arm. You know, Disney last quarter had pretty good uptick in its parks, although it was still suffering for some closures in China. But we're expecting to see some pretty solid gains, especially because rival NBCU Comcast last week posted some pretty significant gains in its parks and resorts division. Now, on media, which is Disney's sort of cable networks and its broadcast network, ABC, that's where I'm very curious to see what Disney is going to say. You know, they haven't been shy in explaining that they have been impacted, of course, by the macroeconomic headwinds that everyone else is facing in advertising. But at the same time, they posted a really great upfront. They do seem to be having some momentum. And so I think those two categories, the media category as well as the parks category, can possibly outweigh any sort of growth slowdown in its streaming platforms, although that's not totally expected.
In terms of those streaming numbers, though, given that Netflix has now posted 2 quarters of subscriber declines, does that give Disney some cover if it did the same, or if they actually showed a decline in streaming subs, would the share price react negatively?
Well, if they showed a decline, I absolutely think the share price would, respond negatively, but they're not expected to show a decline. With Netflix, they were expected to show a pretty significant decline of 2 million, and then they only, slowed down by 1 million. But Disney is not expected to go down. What could happen is that the growth could slow a little bit from what was expected, meaning fewer ads than Disney was anticipating. And I do think its stock would, reflect that if that were to occur. I actually think the metric that Wall Street would be really eager to see is what type of guidance Disney gives in terms of its subscribers for the third quarter. Another thing just to think about too, Disney has had sort of a not great blockbuster season at the movie theaters at this point. They have Avatar coming out later this year, but I don't think they've had the same level of, massive hits being funneled into the streaming service. And I'm curious to see how that's going to impact subscriber growth for last quarter.
What about the FX impact? Of course, they've got all sorts of foreign earnings. So will they be suffering on that point?
Oh, absolutely. I mean, almost every single tech and media company that I've covered during earnings this year has said that this has impacted them. If you look at companies like Netflix, which is also very global and produces a lot of global content, FX was a problem around 4%. In the headwinds last Q1. Then they said that they were expecting it to increase to about 7%. I expect Disney to have a very similar type of problem. And that's especially because if you think about their media portfolio, a significant part of it is overseas, not just box office returns, although that slowed a little bit in China amid censorship, but also things like the parks and resorts that we mentioned, as well as streaming.